So shall we start?
Yes, sir.
Yes, sir.
Last half hour couldn't get record actually. Hmm. So I'll quickly revise few points from section 145. So section 145, what I told, section 145 subsection 1, section 145 subsection 2 and section 145 subsection 3 does not is not anything, but it only says that if you not comply with section 1 and subsection 2, then EU may impose any penalty on you. So section 145 subsection 1 and section 145 subsection 2. 145 subsection 1 says what? You can compute your income, you can follow your maintenance of books of account method as either cash or mercantile. Either cash या फिर mercantile, not both. Secondly, subsection 2 tells you what? You need to follow ICDS. You need to follow ICDS. And ICDS for whom? ICDS for all assessees except for all those individual and HUF which who are not getting their books of account audit, right, in this previous year. If they are not getting their books of account audit, then they need not follow ICDS. Except for them, all the assessees need to follow ICDS. And when they are following mercantile system and they are declaring income under the head PGBP and income from other sources. I told you all the reasons and everything. Similarly, these are the ICDS which have been specified by the central government, notified by in the official gazette of India. Then audit report, we talked about it already. For why is for form 3CA, for why is for what is form 3CB and form 3CD. Form 3CD is further divided into two parts. We discussed in detail about 3CA form and 3CB. In point 3 you will find what? 3 in point 3 you will find statement of particulars true and correct view, because 3CA we already are attaching our audit report, but in form 3CB we specify separately true and fair view also, because we are auditing, and also all the statement of particulars in form 3CD are true and correct, we are specifying that also separately. So that is what form 3CB, and these questions we then solved. Yeah, so let's quickly start with what? Form 3CD now. Form 3CD, statement of particulars required to be furnished under section 44AB of Income Tax Act 1961. Part A and Part B. I told you these are divided in two parts. Part A are having 8 clauses and Part B are having remaining clauses. So Part A is very basic, similar like KYC sort of. What is the name of the assessee? So I'll tell what? Kapil Limited. Address, address of the assessee, and this should be same which is being communicated to the income tax department for the assessment purpose. So this is important. Address should be same as income tax department for assessment purpose. So you have to focus on those points which can be asked as an MCQ also, right? So these are very small clauses which probably won't be asked to you in as a 4 mark question, but can also be asked as an MCQ. Then you have to specify the PAN of Kapil Kashyap Limited. Then whether the assessee is liable to pay any indirect taxes like GST, service tax, sales tax, GST, custom duty, and if yes, then what is the registration number or GST number or any other identification number which has been allotted for the same. Like for example, customs, in Customs Act, you could have been allotted import export code number, right? For GST, you could have separate registration under different states. So all the registration numbers you have to mention here, right? And then status of the assessee. What is your status? Single or sorry, what is the status? Whether you are a person or AOP or BOI or AJP. Do you know all this? BOI is body of individual, AJP is artificial jurisdictional person, AOP is association of person, person is person, that is individual. Similarly, partnership firm हो क्या? Company हो. This status you have to specify here. Further, in case of proprietorship concern, status shall be quoted as individual. Then you have to specify previous year also. What is the previous year with for which this audit is being conducted or for which the tax audit report is being furnished. So previous year and also the assessment year in the next clause. So do you remember previous year and assessment year could be same. if previous year is 2017 and 2018, let's say previous year is 2021 and 2022. So what will be my assessment year?
22 to 23.
22 23, right? But in few cases, previous year could be same as assessment year also. So that is why you have to specifically mention previous year as well as assessment year. Do you remember those cases?
First year of incorporation.
No, no. First year of incorporation, you don't have to directly assess right away, na? If I incorporated in suppose September, then I don't have to furnish my tax audit report or my return of income. I'll give that in next year only. Do you remember these cases? You must
A
have studied
person
in
living
IPCCs.
uh, a person living India without intention of coming back
Yeah, person living
and
India without
transfer
shipping
of
business. Do you remember shipping business? They
shipping
come
business,
here and then
transfer
they
of
leave.
property.
Yes, so there were
Hmm.
cases where previous year would be same as assessment year because income tax won't have time to assess the income next year because they won't be available here. They might leave. So previous year and assessment year you have to separately mention and then indicate the relevant clause of section 44AB. See here, clause 8. You have to specifically mention the clause under which the audit is being undertaken, and that is why I told you what you have to remember all five clauses: clause A, clause B, clause C, D, E. What was clause B? 44AB, clause B,
Profession.
professional. For clause E, 44AB, clause E, clause E,
5 year clause.
44AB, subsection 4. If your total income is exceeding basic exemption limit, then irrespective of your turnover, you have to mandatorily do your books of accounts audit under section 44AB clause. If you fail to, if you fail to give your income under presumptive for next 5 years, right? And then 44AB clause C, simple.
AE
44AE,
44E
44BB, BBB वाला, ठीक है? And clause D,
presumptive वाला AD ADA
ADA, 44 ADA.
Yeah.
44 ADA is for whom? Professionals.
for business
No,
For
no, no. 44
profession.
AD is for business. 44 ADA is for professionals.
for professionals.
Professional.
So you have to indicate the relevant clause of section 44 AB under which audit has been undertaken. This is what clause 8 want you to speaks about. Now clause 8A, 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 8A was inserted recently, and this new clause intends you to state whether you are opting for taxation under any of the section this. So what these sections are, these are the low rate of taxation sections. That is, you can offer your income under very low rate of tax. That is, instead of 30%, you will pay either 15% or 25% of tax in case of companies. Similarly, for BA, BAA, BAB, BAC, these are for individual HUF, and BAD is for cooperative society. So low rate of taxation is being offered under this section. However, you have to separately disallow many of your expenses. That is, you are not allowed to take many of the deduction under this section. Suppose scientific expenditure or preliminary expenses that we saw 35D, 35E. These all expenses you cannot take if you are offering your income under these sections. Correct? So you have to just speak about whether we are offering our income under section 115 BA, BAB, BAC, BAD or not under clause 8A. Then it may be noted about that 115 BA, BAA, BAB are applicable to the company. These three are applicable to the company: BA, BAA, BAB. Then BAC is applicable for individual HUF. I specified in bracket also. BAC is for individual HUF and BAD is for cooperative society. The reply to above clause can be yes or no. And when you opt for this section, then you have to also file 10 IB, 10 IC, 10 ID. Right? So you have to specifically also specify that if you are writing yes to this answer 8A, then you have to also attach copy of form 10 IB IC ID filed online has been obtained from the SSC or not. Fine. So quickly come on to these two questions. Yes, Nikita, tell me first answer. GST department issued a show cause notice to A. Why GST was collected by A but not deposited to the government? Mr. A जो है अपना, request not to disclose his GST registration details while filling particulars to be furnished in Form 360. Mr. A tells auditor, please do not disclose my GST registration. I have not deposited the same to the government and government could levy a lot of penalty or interest on me. So do one thing, not at all disclose any registration number itself under clause 4. So what do you think, Nikita? How should
Disclose under
We
clause
need to disclose the GST registration number
we
as
need to
per.
disclose GST registration number under clause number
4. 4.
4
So,
of Form 3CD, right? And you have to write that clause in entirety. Whether SSE is liable for any whether SSE is liable to pay any indirect taxes, including sales tax, service tax, GST, customs, falna dikna, and if not, whether he has been allotted any registration number if he has specified the registration number. So you have to write all this, and then instruction given is not acceptable as clause 4 of Form 360 requires to see just on the right side I have written only the conclusion part. Of course, the provision part is also available with us, right? So requires tax auditor to furnish the details of registration number or any other indirect tax like excise, GST, etc. Now, non-resident company engaged in extraction of mineral oils claims that its profits is lower than the deemed income chargeable under Section 44BB. So he wants to declare lower income under 44BB. What I remember is that you need to 5% or 10% of total receipts you need to offer as your income. So he wants to offer lower than this 44BB se bhi lower. So what was the clause? Do you remember? Under which this needs to be audited under Section 44AB.
Clause 8
Clause.
will cover in clause
So we have to
8.
report under tax audit report under clause 8 and Section 44AB. Which clause?
clause 4 sub clause 4.
Clause C.
C. Okay.
44AE B वाला था ना?
Hmm.
For, see here. ठीक है? So reporting requirement, it is asking for your reporting requirement. Then you will say simply whether that we need to report under clause 8. Auditor is required to indicate the relevant clause of Section 44AB under which audit is to be conducted. Because they also told you what? Under clause indicate the relevant clause of Section 44AB under which the audit has been conducted. Clear? Now we'll start with what? Part B. Clause 9, clause 10. Not very much important, but let's see. Clause 9 is what? If you are a firm or if you are an association of person, then you have to indicate your partner's name, your member's name. If you are a AOP, then you have to mention your member's name, and if you are a firm, then you have to mention your partner's name and also their profit sharing ratio. And if there is any change in the name or profit sharing ratio during the year, then you have to also mention those particulars of the change. Suppose A and B are the partners, 50-50 was the PSR. Now C has also entered, and now ABC is the ratio is 40:40:20. So you have to specifically mention the change in the partner and the change in the profit sharing ratio, right? Clause 10 is nothing but nature of business or profession. So you have to specify, you might have attested many income tax return also where at the last we specify what nature of the business. Do you remember business code also we specify? So nature of the business or profession, and if you are pursuing more than one business or profession is carried on during the previous year, so then you have to specify nature of every business or profession, which is different if you compare it from income tax return. In the income tax return, we only do what? Major business. What is our major business, and that business code we specify. But here all business have to be specified. All the businesses have to be specified. Remember this. They can ask you again as an MCQ. They can ask you what? Whether do you need to report all the businesses code, or you need to code or do you need to report only those businesses codes which is your major business. Correct? And then if there is any change in the nature of business or profession, then you have to also specify the particulars of such change in the business. Then clause 11, this is important. Books of account are prescribed or not under section 44 AA. Yes.
So we need to disclose only the major businesses, not all the businesses.
We have to disclose every business or profession, nature of every business or profession. Major business or
Okay, sir.
profession, we used to disclose it in income tax return. Here in this clause, we have to disclose nature of every business or profession.
Done, sir.
Clause 11. So do you remember this section 44 AA? This talks about prescribed books of accounts, which have to be adhered to by certain professionals. Certain professional, and in case their turnover or profit is exceeding certain limits. So whether books of accounts are prescribed under section 44 AA, and if yes, what are the list of those books of accounts you have to specify. And then list of books of account maintained and the address at which the books of accounts are maintained. So you have to also specify the books of account maintained and the address at which these books of accounts are maintained. In case books of accounts are maintained in a computer system, then you have to separately specify that these are maintained in computer system or these are maintained in cloud system. And then lastly, list of books of account and nature of relevant documents which you have examined. So if I have to specify this, so in clause A, what I am specifying is whether these are prescribed or not. In clause B, I am telling whether they are maintained or not, and if maintained, then where is it maintained. And clause C may whether I have examined or not those books of account. ठीक है?
So section 44 AA is covered in Income Tax Act.
Yeah. Section 44 AA of Income Tax Act.
Okay, sir.
44 AA of Income Tax Act asks there are certain professionals which is mentioned under subsection 1. Then they ask them all these professionals to maintain books of account. Then subsection 2 they give further limits for businesses if their turnover is exceeding 25 lakhs and profit exceeding 5. I don't know exactly the limits, I don't remember, but there are certain limits. Then they have to maintain these prescribed books of accounts. Right? Now come back directly to clause 12. It says what? If your profit and loss account includes any income from presumptive business also. Like in morning we take what? We took what example of 44 AE wala business. We also had 44 AD business. And then apart from that, we have some other business for which we are doing our audit. Then if you are opting these presumptive incomes now, then you have to specify that in our profit and loss account, the incomes from these presumptive sections are also included. And you have to quantify this. Why? If not, then you would do what? 44 AD, 8% you will simply disclose here expense. And all the expenses that you are doing from your bank account, you could take under audit, under as an audit expense of this business of which you are doing the audit, right? So you have to specifically mention all the profits and losses which have been directly coming from where? From preservative business. Getting clause 12 also. These are very small clauses. We'll just quickly go one by one. And as I told, loads of information you will be overloaded. 50% you will be able to retain. 50% you will have to revise and come back later tomorrow. I'll be asking tomorrow. Fine. Clause 13. Method of accounting employed in the previous year. So what do you think method of accounting is generally? Cash or mercantile, right? So you have to specify here whether you are following cash basis of accounting or mercantile basis of accounting, and whether there has been any change of accounting employed during the year. And if yes, there is a change in the method of accounting, then you have to specify how much is the impact on the profits, whether profit has increased or decreased due to change in from mercantile to cash or from cash to mercantile we have shifted. Then whether the profit has increased or decreased, you have to specify the change and effect on the profit and loss. So this is 13A B C. This talks about method of accounting. Method of accounting, whether there is any change, effect of such change. 13A B C. Similarly 13D E F, I told you earlier, ICDS. ICDS, whether it is applicable, whether there is any change due to ICDS applicability, and effect of such change or disclosure requirement. 13 DEF. See here, whether there is any adjustment required to be made under section 145 subsection 2 because of 145 subsection 2. Do you remember section 145 subsection 2? Just now we did ICDS, right? For all assessee except individual and HUF who are not doing their tax audit, who are not getting their books of account audited under section 44AB in the previous year. And when we are following mercantile books of account, when we are following mercantile method of accounting and declaring our income under the head PGBP or other sources. So whether this is applicable, clause D, if yes, if answer to the D is affirmative, then adjustments you have to specify. And lastly, disclosures 13F. So 13th clause you have to bifurcate into two parts, A, B, C, D, E, F, right? You could say A, B, C, D, E, F. So A was method of accounting, employed, changed, effect on profit and loss. Similarly, D, ICDS under section 145 subsection 2, change effect in profit and loss and disclosure. All income tax and all Indies, all accounting standard also have their disclosure requirements, right? Similarly, all ICDS also have their disclosure requirements. Yes, till now clear? Everything? Any doubt?
Sir, I have to note down whatever you write.
Yeah, you could anytime stop me. I'll give you time. Everyone has received the book.
Wait, sir.
Inventory valuation method is not in line with ICDS 2. Which clause are we supposed to report? Under which clause?
Method.
Clause.
Clause. Wait a minute, sir.
Clause?
Clause 2, sir.
Clause 2? Clause 2
Clause
of
Clause
Clause
13.
13E.
Sorry.
E और F दोनों ही लगे.
so clause 13 DEF, right? Clause 13 DEF.
DEF.
BOD informed that profits is properly arrived as per accounting standards applicable and there need not be any adjustment as per accounting standards. So board of directors is telling what? That we have derived our profit according to accounting standards. We have maintained our books of accounts and thereby derived our profits from there. And we need not do any adjustment according to ICDS. So are they correct? No, we have to make the adjustments, right, from ICDS. So you have to specifically mention clause 13 of clause 13 of tax audit, clause 13 of form 3CD. In tax audit report, auditor has to mention under clause 13A what is there, clause 13B, 13 DEF, these three clauses. Then lastly, stock valuation changed from FIFO basis to weighted average cost basis, but that was not reflected in clause 13B. So what do you think, Rupali? Stock valuation has changed from FIFO to weighted average, but this is not reflected in clause 13B. Should this be reported or not?
Yes.
Yes, sir.
It's change in accounting policy.
There was
Effect on the
Method.
profit
what
and
is
loss.
written there? Change in method of accounting or change in accounting policy? What is
Method of
written in clause
accounting.
13A,
Accounting policy.
13A,
Oh,
13B? Method of accounting or
It's
accounting
method.
policy?
Method.
Method of accounting. What is method of accounting? Cash or mercantile, right?
Yes.
This is change in accounting policy, not a change in
Accounting.
method of accounting. So we need not report this
Need not
point.
report.
Sir, could you please explain the second one?
Second one is simple. BOD is telling that we already arrived at our profit according to accounting standard, according to our books of account, and we are not going to adhere to income computation and disclosure standards, ICDS. We did not do any adjustments according to ICDS. We are not supposed to
Okay,
do
sir.
any adjustments, but they are wrong because clause 13 DEF auditor has to report in their form 3CD. Similarly, ICDS have to be followed, supposed to be followed by all SSEs who are following mercantile system of accounting and disclosing, declaring under the head PGBP and IFRS, right?
Okay, thank you, sir.
So now comes clause 14. So method of valuation of closing stock employed in the previous year. Here you have to specifically mention the method of valuation of closing stock. So there might be a case
Method.
where, yes, yes, Kapil, yes, I was saying, can you follow LIFO system of account, LIFO method of valuation for closing stock? Yes or no?
No, no, no.
No, under where? Under where? Who prohibits this?
ES and Indies both prohibit.
AS India, they have specifically mentioned the method of accounting to be followed, FIFO weighted average, right? Or there are certain other methods also in the Indies. But LIFO is not specifically mentioned and is not allowed therefore. But do we have such any restriction under income tax? Do we have any such restriction under income tax?
No,
No.
no, no.
So even if I am maintaining my method, even if I am valuing my inventory as per LIFO, then I have to specify here method of valuation of closing stock. I'll try what LIFO. In case of deviation from the method of valuation prescribed under section 145A, the effect thereof on the profit and loss, please furnish. So there could be a deviation from 145A. You have to calculate the deviation. Now, what does 145A says you? Section 145A tells you to follow inclusive method of accounting. Section 145A tells you to follow inclusive method of accounting. So suppose I sold a goods, I purchased a goods for 50 and sold it for rupees 100. Suppose GST component is 18%. So inclusive method of accounting tells you to record revenue at 118 and not 100, and record your expenses at 59 and not 50, and then separately disclose your GST expense as 9. Again, profit will be same whether you disclose 150 or 118 and 59 plus 9. Your profit will be 50 only, but your way you present your accounts is different. So section 145A, is there any difference? Is there any difference of valuation of closing stock? Now suppose you are purchasing at 50 rupees and in your books of account you are disclosing it at rupees 50. Now this will go to cost of goods sold, this will go to inventory. If this has not been sold, this will go to inventory, yes or no? So you will show inventory as 50, but under income tax act 145A tells you to do what? 145A tells you to valuate inventory at 59 and not at 50, correct? So based on that, you will have to disclose here whether there is any deviation or not. Again, increase in profit, decrease in profit ultimately will be settled off. There won't be any difference as such, but you have to specifically disclose is there any difference as compared to section 145A. Are we getting this? Yes or no? Mehak, clear? So 145A tells you to follow inclusive method of accounting, but in normally circumstances we follow exclusive method of accounting. There could be a case where there might be a difference in the method of valuation of closing inventory as compared to section 145A, and that needs to be reported in. And what was clause A 14? Clause 14 subclause A, it was with respect to what is the method of valuation of closing stock employed during the previous year. So see here, pay particular attention to the following, that the duties paid in respect of goods cleared have been included. So suppose you have, do you remember customs? There was certain goods called as warehouse goods. So you have to get your goods cleared from the warehouse, customs warehouse, and you have to pay your certain duties to the customs, and that is also included. So that is also we have to verify whether those duties have included this or included in the stock or not, right? Because they might do what, they might show it as a separate expense under customs expense, they might show it as another expense of 10 rupees, but we need to ensure that that is also included in purchase or in our cost of inventory. Similarly, duties payable in respect of goods held in the bond have been included or not. This is what I was talking about, warehouse goods, bonded goods. Check that opening stock of raw material, purchase price of raw material, closing stock of raw material includes all these taxes, indirect taxes, duties. Doesn't matter they are refundable or not, even if they are refundable in nature, but right now we have incurred our duties and expenses, so that will be included as a part of inventory. Once they are refunded, then we can again show it as income, doesn't matter. But right now, even if they are refundable in nature, still we have to include it in our valuation. Clear? That is just the 2 points to be clarified by income tax. Let's quickly see this point. Inventory valued at LIFO basis now change over to FIFO. LIFO to FIFO. Change in valuation of closing stock due to adoption of AS2. So earlier I was not following any accounting standard, but since now I have been following accounting standard 2 and AS2 doesn't allow me to follow LIFO, I'll be following what, FIFO. So difference of rupees 50 like 55 lakhs. Where do we report this 55 lakhs?
Clause 14.
Clause 14. Correct. You have to report that we are following method of accounting. FIFO basis of method of valuation of closing stock, and also under clause B any difference in profit arising. Just read this once. Everything clear till now? Any doubt?
No, sir.
What was clause 4, part A, tax audit report clause 4?
Registration number.
Indirect tax
GST.
registration number, right? So there you can remember,
Indirect tax.
yeah. So there you can also remember like this. From the clause number 4, 4 more clause comes. 4 more clause comes from clause number 4. And if you can just come to clause number 37, 4 very small clause, 34, 35, 36, 37. So 37 relates to cost audit, 38 relates to excise audit, 39 relates to service tax audit, or since service tax is no more there, so you can say also GST audit if they are being done by the department, by the GST department, by the service tax department. And then clause 40, clause 41, sorry, not clause 40, clause 41. During the previous year, any refund or demand has been raised under any tax laws other than income tax act, that is you could say any other indirect taxes, any other indirect tax act, or any other act other than income tax act. So I'll just brief you about these clauses. So suppose cost audit was done carried out under section 148 of the Companies Act, whatever disqualifications or reporting has to be done by the cost auditor. If there are any disqualification or disagreement on any matter, item, value, quantity as may reported, so you have to mention this under clause 37. Similarly, excise audit is being done by the excise department, and they'll come with certain disqualifications, or they'll come out with certain points. So you'll have to mention here in clause 38. 38, you give the details if any of the disqualification or disagreement on any of the matter, item, value, or quantity. Similarly, lastly, section 72A of the Finance Act 1994, you might be knowing Service Act, we used to tell what? Finance Act 1994, and not, there was no Service Act. It was Finance Act 1994 in which Service Act was imposed, service tax was imposed. So this is what service tax, service tax audit. Under still till now service tax audit is going. Till now there are service tax audits which are going by the department. So their report might come, their disqualification might come, there has to be reported under clause 39. And anyway, GST audit which has been taken by the department, those audits can also be reported here under clause 39. Getting this? And lastly, clause 41. Clause 41 tells you what? Let's like I said, you VAT audit, service tax audit. Till now they are being conducted VAT audit, tax audit. So you have to specify name of the applicable act. Suppose Service Tax Act, demand and refund order number. So they'll raise certain demands that you have not paid service tax on this amount. You have to pay this much amount. They'll raise certain demand or they'll issue a refund. So whatever be the demand or refund, they will issue a order number. So you have to specify here order number. Then date of demand raised, date of the order date. For financial year 14-15, suppose for financial year 14-15 this relates to an amount of demand which has been raised or refund which has been issued by the department. So all these points have to be specifically mentioned under clause 41. So from clause 4, you can remember that 4 more clauses gets incepted from clause 4. 37, 38, 39 and 41.
41.
37 cost audit,
Cost audit.
38 excise audit, 39
GST audit.
GST audit or service tax audit, Finance Act
Refund.
1994, and 41
Refund.
Why I am
Refund.
emphasizing on this 37, 38, 39, 40? In my attempt, question came and I was so confused. Question came for excise audit. What is the clause number? Simply this question for 2 marks, MCQ. I told you tax audit in my attempt November 2020, 10 marks directly a question came for case study. 5 questions into 2 marks. And one question was, what is the clause number of excise audit? Simply this was the question for 2 marks. And I was very much confused. They have given all these clauses, clause 37, 38, 39, 40. So you might get confused again. So remember like this, it's in alphabetical order. C, E, G or S, whatever it be. CES starts with 37, starts with cost audit, then excise audit, then tax audit, then apna service tax audit, and lastly what? Clause 41. We have to give details about the audits and the demand orders or refund orders which has been issued by the department. Now let's quickly come to clause 15. So you might be aware about this provision, section 45 1. I don't exactly remember the clause, but section 45, when you convert your capital asset into stock in trade. So what is the amount at which you convert your capital asset into stock in trade as per Income Tax Act? Fair value. Fair value of that capital asset which has been converted into stock in trade. Let's suppose I have been inherited by my fathers and forefathers with a lot of lands. And now I don't know what I'm supposed to do with all these lands. So I started real estate business. I converted all these lands, plots, and started selling them. So these lands up till now, which were my capital asset, I converted this into stock in trade. So stock in trade, fair value, I'll convert these lands. If suppose these capital assets were worth 2 crores and on the date of conversion, converting it into stock in trade, these are worth 20 cr, 20 crores. So I'll value this conversion at 20 cr and my capital gains will be how much? Capital gains will be how much? 18 cr, of course subject to indexation and everything. I'm not calculating that, but subject to indexation we'll have capital gains of 18 crores. This 18 crores will be taxed when you sell these lands, when you sell this stock in trade, and whatever you sell above 20 cr, then that will be taxed under the head PGBP, and till 20 minus 2 cr that will be taxed under the head capital gains. This you might be all be aware about, right? Capital asset converted into stock in trade. So these all details we have to specify. Description of capital asset we have to specify, acquisition date we have to specify, cost of acquisition, because these two will will decide your indexation, right? And then amount at which the asset is converted into stock in trade. Any doubt in clause 15? You have to learn these 4 points. What all we have to report? We have to report the capital asset description, Suppose land, I'll say here what description will be my land, date of acquisition 2nd Feb 2011 2011. Then cost of acquisition was my 2 cr, amount at which asset is converted into stock in trade is 20 cr. So everything has to be reported under clause 15. Now quickly come to clause number 16. Yes, everyone there with me or not? Clause 16.
Yes, sir.
Amounts not credited to profit and loss account being. What does this clause says? You might be aware about section 28 of Income Tax Act, which talks about PGBP section. There are so many items, so many clauses under section 28 which tells you to include this income, that income, this income, that income, right? Even if you are receiving any gift from the client, it will tell you to include that income also under PGBP. If you are receiving any contribution from the government as a promoter's contribution, it might tell you to include that income under the head PGBP. Although your AS Indians might tell you to treat that contribution or treat that subsidy as a capital asset, correct? So if you are taking that contribution as an asset in your balance sheet, but income tax wants you to treat that amount as income under the head PGBP, then these items will come here under clause 16. What are all items? Items which are not credited to profit and loss account. Items if you are,
So audio issue.
so what I was telling is that only those amounts have to be included in clause 16 which is not included in the profit and loss account. If you have already included the same in the profit and loss account, then you don't have to report here. But in case, suppose I gave an example of promoter's contribution by the government, or say suppose we have to include that in accordance with section 28 under the head PGBP, and suppose we have taken that into balance sheet, then that contribution subsidy will have to be added here. So items falling within the scope of section 28 PGBP section, charging section of PGBP, correct? Similarly, pro forma credits, drawbacks, refund of duty, customs, excise or service tax, or refund of sales tax, value added tax, whatever duties and taxes, whatever refunds or credits or drawbacks you are getting back, this also you have to add back in you as an income under the head PGBP. And but why they are specifically mentioning here? Of course, we will be taking that under our profit and loss account income side, definitely. But this we have to include under PGBP as soon as these refunds are admitted as dues by the authorities concerned. So generally, point B, point C, you will find what these are the points where entities are skeptical about their receipts. So they do what? They account for this income only when they receive this income, and not before that. They have written this in their notes to account, their accounting policies, that will account for refund of taxes when government gives us the refund, government gives us the drawbacks, not before that, because we are very skeptical about government's decision or government's order or refund order. So until and unless we receive the same, we won't be accounting it. Because many a times you might be knowing, there was a section, I don't exactly remember, section 256 of Income Tax Act, I think so, where you could adjust your demand with refund. So in one financial year I could issue a refund order, but in another financial year, next financial year, I could issue a demand order, and I could adjust with this refund amount. Whatever refund was due to you, the amount that you owe to me, I'll adjust with that. So basis that, generally entities do what? Account these incomes only on receipt basis, and that is why you have to specifically insert these incomes as and when they are admitted as due by the department. Similarly, for escalation claims, suppose I was in L&T and they have so many escalation claims on the government authorities, because of the inflation or because of many other factors, escalation claims are there. So you have to include these as well, as and when they have been accepted by the client, by our customer, during the previous year. And you don't have to wait till you account for in your books of account, because when you will account in your books of account, when you will actually receive it. So it's not like you are following hybrid system of accounting, you are following a mercantile. But mercantile is also stating what? You have to recognize your income only when you are ascertained of your realization, when you are sure about your realization. And here they say what? We are not sure about our realization, and therefore we account it only in the year of receipt. So they are, according to accounting standard, they are correct. It's not like they are following cash system accounting, they are following mercantile system only. But for few items they can follow cash basis when they are skeptical, but we have to include here under clause 16. Getting this? Clause 16, amounts not credited to profit and loss account. If not credited, if already credited, you don't have to include. If not credited, first was 28 charging section, second was refund of duties, drawbacks of duties, third was escalation claims made during the previous year and accepted. And second also in that is refund of duties, you have to include in the previous year in which it was admitted as due by the authorities. If authorities admit as due, then you have to include it in your clause. An escalation claim when in the previous year in which it was accepted. Correct? And lastly, any other item of income which might have left in section which you might have left in including in your profit and loss account, and other capital receipt if any. Let's say I gave an example of promoter's contribution, or suppose profit on sale of investment. Profit on sale of investment. Now this is a capital receipt. Suppose I bought an investment of 2 CR and I sold it for 2.5 CR. How much will I include here? 0.5, not the entire 2.5 CR, but the capital receipts, the amount which should have gone to profit and loss account, 0.5 CR. Correct? So quickly go through these questions. Nikita made a claim for refund in previous year 2018-2019. You made a claim of refund in the previous year 2018-2019 of customs duty, which was admitted as due by the custom authority in April 2019. You have not reported in tax audit report of 2018-19. Have you done correct or not, Nikita?
Sir, I guess this is correct because we will be reporting when we will be actually receiving the refund.
It will be reported when?
When we will actually be receiving the refund.
No, I told
On the
you that
receipt of the refund.
entities generally tend to follow cash system accounting in the cases like this because they are skeptical about this. But income tax under clause 16, they tell you to include this income under clause 16 when refund of duties, when you need to include under clause 16, when you need to include under your income tax computation. When do you need to report under clause 16 tax audit report? Clause 16 sub clause B. Just read that again. I'm not talking about accounting standards.
When it is not considered in P&L.
Yeah, of course it is not considered in profit and loss, but when they are admitted as due by the authorities as concerned. So when this refund has been admitted by the authorities, Nikita, when have
So
they admitted
basically
this
when
refund?
we will have the intimation order.
Sorry.
Basically when there will be an intimation order for this year.
Yeah, so when have they admitted? They have admitted as due in
In the
April, na? April 2019. Yes. So when do you think we should include this in our tax audit report? In 2018-19 or 2019-20?
19.
19-20, right? So that is what they are saying, not reported in tax audit report of 2018-19. Have they done correct adjustment?
Yes.
Yes.
Since.
So claims which have been admitted as due after the relevant previous year need not be reported. Claims accepted as due after the previous year, so that will be included in the tax audit report of that relevant previous year, not in this previous year. Any doubt in this, Nikita? Clear?
Yes, sir.
Then made an escalation claim to one of its customers but which was not accounted as income. Reporting responsibility again, Nikita, tell me. You have made an escalation claim to one of its customers. When will you report this in your tax audit report? Escalation claims.
When the customer will be accepting the
When the customers have
escalation.
accepted the escalation claim, right? So you'll have to give a judgmental answer. If the customers have accepted the claim, we'll report it under clause 16 subclause C. Any acceleration claim accepted during the previous year are not credited. So reporting required assuming that customers have accepted the acceleration claims. Capital receipts, I gave you some illustrative example. Profit and loss on sale of investment. Profit and loss on sale of fixed asset. Similarly, profit and loss on promoters contribution, as I told you. Okay, so this is a separate question which was asked twice or thrice by ICI. So you can refer compiler or even study mat, or I'll do what I'll also tell you. These are the 3 points. One more point was there. Okay, profit on sale of fixed asset, profit on sale of investment, promoters contribution, or any other nature of capital receipts which you think should be included in profit and loss account. Now come back to clause 17. This clause was asked in May 23, this attempt, for 5 marks. Question number 5C. Sorry, for 4 marks. It's very easy. You might be aware about section 43 CA or section 50C. Section 43 CA or section 50C. Anyone?
No, sir.
Section 43 CA or section 50C talks about the same thing. Section 50C tells you that in case if you are receiving as a consideration for capital gains, if you are selling your capital assets for a consideration and your consideration is less than your stamp duty value, consideration is less than the stamp duty value. What is stamp duty value? For all the properties, there is a value which has been determined by the stamp duty authorities, that is by an authority of state, that they determine that this should be the minimum value of this property. If you are receiving any consideration less than this, then your value of consideration for the purpose of computation of capital gains will be deemed to be the stamp duty value only, will be deemed to be stamp duty value only. And the person who is receiving the amount, in his hands the duty will be the tax will be charged on extra amount, which is stamp duty value minus consideration. I'll take an example here. Let's take an example. Suppose I had a property of 50 lakhs and I sold it to Deva. I sold to Deva for 58 lakhs. So my consideration amount is how much? 58 lakhs. Is it greater than stamp duty value or not? 50 lakhs. Stamp duty value is 50 lakh of this property. Yes. So there is no problem by the income tax that you are understating your income. But what I can do, I can simply tell Deva that Deva, bhai, you can just simply give 20 lakhs in cash, black money, and rest 38 lakhs only we will show it as full value of consideration. So what income tax department tells here is, if you try to do this, that is disclosing your sale consideration less than stamp duty value, then full, that is your capital gains, will be computed based on your stamp duty value only. That is stamp duty value will only be considered as full value of consideration. And the person receiving the money, that is I am receiving the money, so he is receiving by how much amount? Sorry, I am receiving how much? 38 lakhs according to contract. But for me, computation will be done on capital gains as 50 lakhs. And for the person receiving the property, for the person who is receiving the property, that is Deva is receiving my land, which is worth rupees 50 lakhs, but he is receiving for 38 lakhs. Under his income, 12 lakhs will be added as income under other sources, under section 56 to 10. Getting this? So both the person's income will be added under their individual heads of income. So that is what this also tells about. Section 50C deals with full value of consideration in case of consideration less. Yeah.
सर इन दैट 43C एंड 43C और 50C में 5% का अलाउड रहता है ना शायद.
Yeah, 10% is allowed as a bandwidth, but here we will not see. I'll separately discuss that bandwidth in clause 26, 28. because their debt is relevant. But right now here it is not relevant, because here you have to report anyway, even if it is within the bandwidth of 10%. So here you have to receive report what is the consideration that you received for your property, and what is the stamp duty value of that property, irrespective of whether that is within the bandwidth of 10% or not. And that bandwidth was increased to 20% during the COVID time, which you might not learn now. That was relevant at that time during the COVID, and that too for increasing the sale of house property in Mumbai. That was specifically increased to 20% bandwidth, right? So what you have all have to mention is, you have to mention details of property. Suppose house property in Mumbai. What is the consideration received or the accrued? I received 48 lakhs, but stamp duty value is how much? 65 lakhs. So you have to report all these properties in the books of accounts of the SSC if you find any property which is being sold for less than stamp duty value. If already more than stamp duty value, then you need not report the same. Correct? You can see here where any land or building or both is transferred during the previous year for a consideration less than, transferred for a consideration less than the stamp duty value, then you have to report the same when consideration is less than the stamp duty value. Like land and building consideration I received is 15 lakh. However, value adopted or assessed is 16 lakh. Irrespective of the 10% bandwidth, I have to report here under this table, that is clause 17. So that was only the question that was asked in May 23. 4 marks straight away. 4 out of 4 you can get easily. Getting this? So I really don't want you all to leave any clause. If you're not getting any clause, straight away ask me. Do not feel any sort of hesitation. I can repeat as many times as you want. Yes, clause 17 till now, any doubt?
So can you please repeat the example again? Whatever you said
Yeah,
about the cash or other payments,
whatever I said for,
cash payment or other payments.
yeah, like 50 lakhs is the property value, and right now I want to sell it for 58 lakhs. Stamp duty value is the value which has been adopted or assessed by the state government. But I can assess more than that, right? I can assess my market value of this property to be more than stamp duty value. So stamp duty state have assessed their property value as 50 lakhs, this property value. But I am willing to sell it as 60 lakhs, and I negotiated and went till 58 lakhs. So I want to sell it for 58 lakhs. But what I'll tell you what, if you give me 58 lakhs, then I'll have to show it as 58 lakhs under income tax. So for that purpose, I am telling you to either give me 50 lakhs only, rest 8 lakhs we can show it as cash, because stamp duty value anyway it will be fulfilling the condition. And further to that, income tax already knew that many people are selling their value less than stamp duty value, or not selling but showing it as sale of value of property less than stamp duty value just to evade the tax. So I'll tell you what, give me 38 lakhs in bank and rest 20 lakhs in cash, and we'll have a contract of 38 lakh only. But again, income tax force you to full full declare your full value of consideration as stamp duty value, that is 50 lakh only. You have to declare your income under the head capital gain as 50 lakhs, and the person that is you are receiving the property which is worth 50 lakhs, but you are receiving it for 38 lakhs. So under your other sources head, 12 lakhs will be added, because you got a property worth 50 lakhs only for 38 lakhs. Getting it?
Getting sir. Fine.
Now let's come to clause 18. We'll be covering till clause 20. Fine. Three more clause. Clause 18. So particulars of depreciation which is allowable as per Income Tax Act 1961 in respect of each asset or block of asset as the case may be. This is a very important clause as far as practicable audits are concerned, because all the assessees have to fill their clause 18 anyway. So clause 18 deals with respect to depreciation, capital assets of the entity, or any assets of the entity. So you have to describe the asset or block of the entity. So I'll describe my asset as PPE, then another asset will be my intangible asset or patent, right? Then rate of depreciation will, that is charged. So PPE rate of depreciation I'll here specify 15%, 10%, 5% as the case may be. Intangible asset 25%. Computers and all, what is the rate of depreciation? 40% I guess, right? So rate of depreciation you have to specify. Then actual cost of WDV as the case may be. So you have to specify here WDV, opening WDV, actual cost or WDV as the case may be, and then any addition or deduction during the year that you have made. So here you have made addition or deletions you have made during the year. You have to also adjust for any SENVAT adjustments, excise adjustment, because you might have purchased an asset you might have imported an asset for which you might have paid customs, for which you might have paid excise, GST, anything. So you might have to also to include those taxes also adjusted on account of SENVAT, change in rate of exchange currency also imported. So exchange currency value you have to account for the same. And lastly, subsidy or grant you might have received. So this subsidy or grant that you receive on any asset that you might have purchased, if you receive it from government, then you may reduce it by reducing the value of asset. So addition or deletion, here it will come as amounts that is come. Let's say you bought an asset for 50 lakhs, so you'll add as 50 lakhs here, but you during the year also sold one asset for 20 lakhs, so you will subtract 20 lakhs here, any additions or deletions during the year. Now this 50 lakhs you received an contribution subsidy from the government of 10 lakhs, so you will not show here as 50 lakhs, rather you will show here as 40 lakhs. Clear? So subsidy, grant, change in rate of foreign exchange, SENVAT, everything has to be adjusted for. And lastly, depreciation allowable. What is the depreciation allowable? So 40% will charge here, 25% depreciation amount will be charged here, and lastly closing WDV will be calculated. Clear? It's very operational technical clause which generally doesn't come in exam, but is a clause which is not like which is applicable to all the entities. Clause 18. Clause 19 is very simple. You must be aware about some certain section like 35(1), 2, 35(a)(b), where scientific expenditure earlier deduction was allowed more than 100%. That is, you give contribution to IIT for certain scientific research, and income tax will allow you deduction of 150%. 200% deduction was also allowed certain times, 125%. So these are now being ultimately these have now been restricted to 100% by Finance Act amended for 2022. But before that, there were many sections which allowed you expenditure of incurring, if you are incurring of 100 rupees, but they are allowing you expense of rupees 150, that is 150% of deduction, like scientific expenditure 32 AC, 32 AD, 33 AB, ABA. This 33 AB, 33 ABA, do you remember? This is what extraction of mineral oils expense. For this, 20% of the profits have to be deposited in SBI account for you to claim the expense. Similarly, 33 AB is your tea coffee rubber business. Tea coffee rubber business, for this 40% of the profit have to be maintained with NABARD account. All these accounts are there for which you can claim as expense. So you have to specify the section under which you are claiming your expense, amounts that you have debited to profit and loss account. Let's suppose 35 AB I had debited 100 lakhs, and amount admissible as per income tax was 150%. So I will write here as 150 lakhs. Amounts debited to profit and loss account will be 100 lakhs, but amount available under income tax act will be 150 lakhs or 50 lakhs. 50% deduction is allowed if suppose 60%, 40%, whatever be. So that is what they are wanting you to report here. They want to report these sections: 32 AC, AD, 33 AB, ABA, 35 1, 2, 35 AB, 35 AA, and amount which you have debited in your profit and loss account, and amount which is allowed by the income tax act, amount which is admissible under income tax act as per the provision of income tax act to profit and loss, and also fulfills the condition, whatever the condition be it. Like for 33, this rubber, tea coffee rubber, you have to follow many conditions, that you cannot sell that asset for 8 years. If you are taking capital expenditure under section 33 AB as a kharcha, as a expense in the same year, entire expense you can take, but then you don't have to sell that asset for 8 years from the close of the financial year. Similarly, there are many other conditions, that you have to use this asset only for the purpose of tea coffee rubber plantation business and not for any other purpose. You cannot if you are depositing your 40% of the profit amount to NABARD, then you cannot use this amount to any other purpose. These are all the conditions. So all these conditions have to be met if any specified under the relevant act of the Income Tax Act 1961. Clause 19. And then lastly clause 20.
So do we have to remember all these sections?
All the clause numbers, yes. I'll be asking you
So
certain clause.
sections like 32 AC, 32 AD.
No, 32 AC, 32 AD don't have to remember exactly, but yeah, you have to get an idea. Yes, like for 32 AC, something sort of that scientific expenditure, or this was investment allowance. 32 AD was additional depreciation, or tea, coffee, rubber, like 33 AB, 33 kind of this range section. You'll have to just get an idea that yes, these sections were covered in clause 19, and also all these sections were covered in clause um, 24. Clause 24 also, because all those sections in which you took deduction, if you fail to follow all these conditions which I just told you, like if you fail to keep your asset for 8 years, or if you fail to use that money for the same purpose, then those deduction which you take will be added back as your income and will have to be reported under clause 24. So you just have to get an idea of all these sections that will be falling under clause 19 and clause 24. Clause 24
Okay,
where
sir.
you took these deductions but fail to comply with the conditions, then that will be added back as your income and that has to be reported under clause 24. But when you are taking the deduction, then you have to report it under clause 19.
Okay.
Fine. Last clause of the day. So any sum paid to an employee as bonus or commission for services rendered where such sum was otherwise payable to him as profit or dividend. So if you remember this section 36 subsection 1 clause 2, section 36 subsection 1 clause 2 allows you to take deduction of bonus when you pay it to employee. Allows you to take deduction of bonus when you pay it to employee, but it prohibits you to take deduction of the bonus when you pay it to employee when it was anyway payable to him by way of dividend. Like what will I do? Let's suppose you are all my employee and you are to all you I have also given you ESOPs. So it might happen that to all the shares I'll be distributing dividend, but I know this dividend expense, this dividend which I'm distributing to you is not a tax deductible expense. Correct? This dividend which I'm distributing to you is not a tax deductible expense. So I'll tell you what, all my employees, you don't take dividend X. Instead, take this as a bonus. Instead, take this as bonus. You will be receiving any amount, and I will not be giving dividend, but I'll be giving it as bonus. So what will happen here? I'll be having tax deductible expense as bonus instead of dividend. So that is why they are saying what, if that amount is already liable to be paid to him as a dividend, then that bonus will not be allowed to you as a expense. So any sum paid to an employee as bonus or commission for services rendered where such sum was already otherwise payable to him as profit or dividend, then you have to report the amount here, because this will get disallowed in your computation of income. Many a times this happens that all the bonus and expenses articles used to do what, as an article I also did a mistake, what, that all the bonus and commission expense I included here. Not all, only those expenses which are otherwise payable to the employees as dividend or profit, because these will be added back to the computation of income. Clear? So you have to specify the description of person, bonus amount, expenditure not considered as bonus, and the description, what is the description, why it is not considered as bonus, whether it is already payable as profit or whether it is already payable as dividend, and any remark according to you. Lastly, details of contribution received from employees
So
for various, yeah.
please repeat the clause 20, subclause
So
A.
20 subclause A, what does it say? Suppose I have to pay dividend to you anyway, and you are also my employee. You are also my shareholder, and you are also my employee. So instead of paying dividend, I'll pay bonus. I'll say what? If I pay dividend to you, I won't get tax deduction, right? So I'll pay you bonus. I'll also get tax deduction, and you'll also get your amount. So that is not allowed by Income Tax Act. They will not allow this as an expense. So for adding back that expense, we have to report here under clause 20 subclause A. Only those bonus which is already otherwise payable to the employee as profit of
Dividend.
clear.
Yes, sir.
Now last clause, subclause, sorry, clause 20 subclause B, which is EPF ESIC contribution. Now EPF ESIC contribution section 36 section 36 subsection 1 clause 5A again allows you to take deduction provided you are paying within due date. On payment basis, these are allowable expenses. So details of contribution received from employees for various funds as referred to in section 36(1)(5)(a), you have to specifically mention all year nature of funds, suppose EPF, ESIC, some received from employee contribution. There are two types of contribution, you know, employer contribution and employee contribution. Whatever amount we are deducting as a from salary of the employee, the same amount we also have to contribute to the EAPF ESIC department. So some received from employee. Due date of payment, what is the due date of payment for EPF and ESIC? Anyone? 15th of next month. Earlier for ESIC it was 21st, but it was long time back. Now both 15th of next month. The actual amount which has paid from the sum received and due, how much amount I have paid and actual date of payment, whether it is 14th of next month or 15th or 16th or whatever be it. What is the date of payment? So this is important because this is linked to clause 26. I'll just quickly come to clause 26, which relates to section 43B. This is an important clause. Everyone might be aware about clause section 43B. Section 43B wale kharche. Section 43B expense is allowed only on payment basis. Yes,
Payment basis.
so I'll just brief you about section 43B. All the expenses which are mentioned under section 43B, like bonus to employee, EPF ESIC contribution, EPF ESIC, कौन सा contribution? Which contribution? Employer contribution, not all contribution. Employee contribution is not covered here, only employer contribution. If employee contribution you fail to pay within due date, then you won't be allowed as this expense as a deduction at all. Recently a judgment came, if you remember. Earlier what used to happen, EPF and ESIC employer contribution, even if I fail to pay within due date, I used to take that deduction under section 43B on payment basis. Because under section 43B, what does it say? All this expense will not be allowed to you unless you pay it before the due date of return of income. Before the due date of return of income. Due date, not actual date of return of income. Again, I am emphasizing on this because again, this will relate to our tax audit report amendment question. You can now amend your tax audit report, which was not allowed earlier based on section 43B and 40A. Again, we'll revisit, don't worry about that. But just remember what section 43B expense is allowed to you on payment basis if you pay on or before due date of return of income. Correct? So EPF ESIC employer contribution, even if I pay with before due date of return of income, after due date of as per EPF Act, but before due date of return of income, I will take under section 43B. But employee contribution I cannot take because employee contribution is not mentioned in 43B. Only employer's contribution is mentioned. Similarly, other expenses like railway wagon, if you are booking railway wagon for your expense, and there are other expenses, indirect taxes payment. If you take, then you can take that expense only if you are paying GST before the due date of return of income. Suppose March month GST, amount or any indirect taxes for that matter, you have not paid. So before filing due date of income, before filing due date of return of income, if you have paid, then only this expense will be allowed, as this will be get added back to your income and will be allowed when? In the year of payment. So 26 clause 26, you have to report all these expenses which is disallowed under section 43B and which is allowed under section 43B. So this is what clause A, subclause A and subclause B. Just last 5 minutes, pay focus. I know it's already overloaded, but just last 5 minutes. Important, this is very, very important clause. I'll just take with as an example. I'll give you one example. suppose previous year 22-23, previous year 22-23 bonus to employee 20 lakhs is still due 31st March 23. So assessment year 23-24, that is previous year 22-23, this expense will not be allowed to me until I pay the amount to the employee. So before, let's say due date of return of income is 31st October for tax audit cases. Due date of return of income, before this I pay the amount, then this will be allowed as expense. If I fail to pay, this will be added back. If I fail to pay, this will be added back and reported, and will be reported here. And will be reported, and will be reported here. Why B not A? Why B not A? Not here. Here, it will be reported here. Why? Because this expense relates to this previous year. This expense was incurred in the previous year. Already, if this already existed, if this expense was already existed, then this will be disclosed under point A. Again, we'll come back in this example only. If I fail to pay, then this will be added back in my income. And now, next year, it will be allowed only on payment basis. So next year, suppose I pay on 31st July. So now you cannot say that since we paid before due date of return of income, 31st July 20, just a second, I pay the amount, then this will be allowed. I pay the amount, let's say 31st July 23, then this will be allowed to me as an expense, right? Now if I pay the amount on 31st July 2024, if I do not pay this amount under 31st July 2023, instead I pay it on 31st July 2024, then in which year this expense will be allowed to me? Bonus? In the year of payment. Here we won't see whether we have paid before due date of return of income or not. This we won't see. After you missed one shot, now you will get your expense as deduction only in the year of payment. So this is year of payment will be how much? Which? 24-25. Previous year 24-25. You won't have to see that since we paid before due date of return of income, so we can get previous year 23-24. We'll get deduction only in the year of payment. In the year of payment. Getting this? So in the year of payment, previous year 24-25, this will appear here. Because why? Because this pre-existed on the first day of the previous year. This was already there in the previous year. First day of the previous year, this liability was already there. Now you have to determine whether you paid during the previous year, then you will disclose the amount here. And if we still not paid the amount here, then this will be disclosed here. And for previous year 22-23, it will be disclosed in point B and not point A. Did you get the difference in point A and point B? And the provision specifically with respect to 43B? Or still any doubt? Sony?
No doubt, sir.
Got everyone?
Yes, sir.
So you can just read the note beside it. In some cases, the tax auditor may find amounts of the nature referred to section 43B being credited to the profit and loss account, although not been allowed as a deduction in any previous year. What does it say? That in some cases there could be certain expenses which is not allowed by the income tax department under section 43B because they have not been paid before due date of return of income. The amounts so credited to the profit and loss account are not chargeable to tax. What does it say? Let's suppose there is also one more expense under section 43B which deals with interest paid to banks, interest on bank loan. Now if this interest on banking loans, if you have not paid, then under section 43B it will be disallowed. But let's suppose banks in the next year later on waived off your interest payment. You defaulted and banks also waived off. Okay, fine, you don't pay us the interest. Let's only pay the principal amount. Banks waived off the interest amount. Will you be crediting this under your profit and loss account income? Interest amount only we did not take as deduction only, right? We didn't take as deduction. This was already added back on in our income books of account in that relevant previous year. So since this is not taken as deduction, That is what they are saying. Says since this is not taken as deduction, this will also not be credited to our income account. The amounts so credited to the profit and loss account are not chargeable to tax since the condition referred to in section 41(1). And what does the condition specified in section 41(1) is? Condition. What is the condition here is? It should be charged to profit and loss account. Charged to profit and loss account. But this was not charged to profit and loss account at all, right? This was added back in our income statement. So section 41 have not been satisfied. Auditor should identify such items and maintain the same in his working papers as well. So this question can come. This is generally the case of Mahindra and Mahindra. Case law was there in Income Tax Act as far as I remember. But you might find in your DT paper as well that they can give you that case. Do you need to add back this income in your profit and loss account? Then you have to specify this. Since this was already not deducted.
The audio. Yes, sir.
So this was also clause 26 which we have completed. You can find few questions in the compiler and also one important provision which relates to tax audit amendment. So tax audit report which we have issued, suppose we have to issue tax audit report before 30th of September. Suppose we issued tax audit report on 31st of August, right? Now till that date they haven't made the payment, so we disallowed that expense and reported here under clause 26. But what I said, section 43b tells you actual date of return or due date of payment, due date of return of income, right? If you pay before the due date of return of income, then you will be allowed deduction. So section 43b which we added back will be a wrong report here. So to amend this reporting, income tax has allowed for us to amend our tax audit report only on account of two cases with respect to provision. Of course there are other cases which we'll study later, but on account of two cases, one is section 43b which is clause 26 and other is section 40 small a ia, 40 small a ia and 40 small a ib, where you might have you might know 40 a ia in which TDS deducted but not paid, TDS deducted on the expense but not paid, then expense will be disallowed. 30% of the expense will be disallowed and will be allowed in the year of TDS payment. Similarly, if this is the case for resident, similarly if this is the case for non-resident, that is non-resident TDS deducted but not paid or TDS not at all deducted only, so then this expense to NR will 100% be disallowed. So all these expense before due date of return of payment, if you have made the TDS payment or whatever amendment you want to make, then you can amend the tax audit report. And that is what the question also came in November 2022 exam, right? So we have linked this. Just remember this section 26, clause 26 with 43b, section 43b, and last section we've learned was clause 20, in which we learned few expenses which relates to 43b, bonus to employee and EPF ESIC. Bonus to employee also we have to disclose whether that bonus or commission is already payable to employee as a dividend or profit, and similarly EPF ESIC we have to separately disclose the name of fund, amount of fund, the actual date of payment, due date of payment, and any remarks if you have any. So you will have to learn all this, right? Tables. If they ask you to report, you will have to report in this format in exam. So wherever table is mentioned, you will have to learn the table format. It is not very hectic, but easy only, like very logical. Here nature of the fund you will have to specify EPF, ESIC or what, sum of the employee contribution, what is whatever you have received, due date of payment, actual amount you have paid, and actual date of payment. Clear?
Yes, sir.
So how much information you got today? Yes. How much? I told you I'll ask. How much information you got?
2.5 ton.
No, we'll get daily one ton. Now we'll get get accumulate tomorrow? 2 tons. To revise accordingly, you already know the vastness of the subject. I did not lay much emphasis on the subject. I directly started with syllabus and everything. You might already be aware this is one of the vast subject of CA final. If you are aware about this, like direct tax. After direct tax, I consider audit as the most vast subject. In terms of revision, you might have to revise much more than other subject. Law you might revise 3-4 times, still you will be able to recall. Audit you'll have to revise again and again. Tax audit specifically, if you are comfortable with DT, then you'll be this will be easy. But still, if not comfortable, I find so many students leaving this chapter. Just why? Just because they are attempting group 1 earlier, or they have not studied DT till now. But it's not like that. You will have to study. You'll have to study tax audit chapter. Very important chapter. I told you the importance. Please start on this. Right? Properly revise, come back tomorrow, be punctual, and I'll be asking questions as well. If we are able to finish off this chapter by tomorrow. Tomorrow is Sunday, again it will be an elongated session, but I'll make sure I'll give certain leaves in between. Don't worry, for you to revise. And I want that once we complete all the chapters, as and when we complete the chapters, I want you to pay special focus on test and revisions and give the test sincerely. Right? I am willing to give so much time to check all your test papers. You just have to give that much sincerity to the test and revisions. Rest will be covered, don't worry. If you ask me the paper for May 23, it wasn't like you might have heard that it was really hard, it was really tough. Just now you say one question from tax audit came from here. If you would have studied the tax audit, would you would have find it hard? No, right? Although this was new. All these clauses I mentioned in Telegram also, the clauses which I find important. Why? Because these are not yet tested by ICI, might be tested, and exactly the same happened. Same happened, and that is why tested, and all the students felt that the paper is hard, but it's not actually the case. You have to be thorough with everything. Just have to give time. The more time you give, the more comfortable you will be with the subject, and the probability of you scoring the exemption will increase. Time is the only factor that you have to focus. You have to give time to it. You can revise. There are so many revision lectures also which I have uploaded on YouTube. In case you want to revise this tax audit in 2 hours, there is a lecture. Of course it's in Hindi, not in English. And then in any case, after this batch also, you'll have to stay updated, stay touched with this subject. It's not like other subjects where you can just leave. If you if you tell me SFM, okay, one time, two time I have done SFM, then I can move on to another subject. But specifically for direct tax and audit, I find these two subjects not to live in a single day also. I'll revise it even if for an hour or two, I'll revise it daily. Whatever section I could revise. So it's not like you just leave the subject after the batch. You'll have to revise daily on a daily basis, at least an hour or two, right? Else everything will be vain. So we'll
So
move
is
on.
this lecture, sorry sir, is this lecture will be uploaded on YouTube?
Yeah, this lecture will be uploaded.
On,
First two lectures, yeah.
okay sir, thank you sir.
And anyway, anyone who is not able to attend the lecture can get the backups. I'll share the link in our group only, Telegram group. And regarding books, I'll just tell you one thing. Book Sampurna soft copy everyone might be having. Is there anyone who haven't received Sampurna soft copy?
I have not
Sir,
received.
I don't have,
I have
sir.
not,
So
I also don't
soft
have.
copy, I told you, you have to give me certain details. I say registration number, name, date of birth, and everything. I have mentioned in the group. Some of you might not be able to see the message. Yesterday, one girl messaged me, so that you have to give me those details. Then I'll encrypt the book and share it with you accordingly. So share it with me by today. I'll share the book, soft copy. And for compiler and MCQ book, if you want in hard copy, you'll have to place order separately. And even if for soft copy also, you'll have to order separately for compiler and soft copy. Not much. Soft copy is of 200 rupees. You'll get both compiler and MCQ. And if you want hard copy, then that is priced separately. Clear? And Sampurna book is available with you, and hard copy is not there. You'll get soft copy. Clear? So stay updated with the material. Write down all the important points that you find just beside the notes. Also, you can use the space for notes column very efficiently, and make use of that, because that is very important. And of course, the questions that I have given just beside the topic, or anything important just beside the topic that I gave, which I might feel important, I have inserted it. Clear? So that was with regard to books. And told you we'll start with our session from 7 a.m. only, because yeah, Saturday Sunday I can afford maybe a bit delayed session, but probably not on weekdays, right? Because anyway I'll have to leave for office by 9:45. And just an heads up, I told you earlier also that June month will be a bit hectic for me. Right now I started returning to office from 10 p.m, 10-11 already ho raha hai meko. So don't delay the session in the morning. We won't be having then much time. I'll have to wrap up by about 9:30, 9:40 anyway. ठीक है?
Okay, sir.
Okay,
So
sir.
we'll see you tomorrow. Revise at least 0.5 ton.
Sure, sir.
Bye.
Bye, sir.